Okay, everyone watching this video. Um, this video is called Calculating the Exact Date. I got the date in there. The price of gold will reach 62.95 per ounce. I've already done that one in video 2, and that's what this video is about. Let's move on to the outline. In the outline, I'm going to show, just do a quick recap of video 1 and video 2, because that talks about the Dow Gold theory. All these videos, this is the third video in the series. And the rest of the slide is just showing you how I came up with that date. Now, I know it's kind of arrogant, or I don't know what the word for it is, but to say that I know what the exact date is, well, I'm just kind of being silly there, but I thought maybe it might attract more viewers. Uh, these videos don't, this type of video is not going to get a lot of viewers, so uh, that's what that's about. So here's the video 1 and video 2 recap, and I'm going to go through them quicker this time. Um, you can just go back and watch the original video if you want more detail. I've got a lot of data here. Uh, the line in blue is the Dow priced in gold, or another way of putting it is the Dow gold ratio. Rather than pricing the Dow in dollars, when you price it in gold, you get to see a different pattern, and it's more reliable, at least in my opinion. And so the idea, if you're invested, the idea is to invest any time period in which this thing is going up. You're invested in stocks, and when it's going down, you're invested in gold. And historically, I've got some calculations just for comparison purposes. Historically, what if you had invested 1,000 here, and I'm calling this the present day, even though it's starting to work its way till the end of January. This is the end of December. These are all end of month days, and so we're right in here. And so since that's down, we're in a section of time that switched over on at the end of September 2018. Uh, that my contingent is it's better to be in gold, or in my case, I'm mostly in gold mining. Uh, this is actually the same slide, almost the same slide. It looks like just a few things are. I had originally come up with November 2023, and then when I did this video, I came up with 324. It's only a few months beyond that. And future videos, I'm going to calculate this a lot more times, because I know that uh, you can't really. People will say you can't calculate the exact price it's going to rise to, but just the calculation lends itself to coming up with an exact number. And the idea for me is to get comfortable with it. That's the whole point of all of this. Okay, so the results, and I'm still on the recap, but just real quickly, if you're uh, a perma gold bug, uh, you're better off than cash, but it's not really a great investment when you compare it to being in the Dow, a perma Dow bull. Somebody who is always invested in the Dow. And if you're one of those people, you do 5 times better. Well, the whole point of the first 2 videos is to say, at least go by this pattern right here. And if you go by that, I mean, it's literally 28,000 times better than being in this one. And so keeping an open mind to, rather than being a perma gold bull or a perma Dow bull, if you're open to switching, and you do it this way, you're going to end up with $1,000 ends up to be 10.6 trillion. Of course, we can't go back in time to February 1915, but it's a worthwhile comparison. And what's going to matter is what happens from really today, which is January 23rd today, as I'm doing this, what happens from here down. And my contention is, what I'm doing is I'm in gold and gold mining now. I'm not a gold bug. Now, how I came up with the date uh, for the high, that's what this video is about. And so all I'm doing is, and this is the exact same thing as this in schematic. This is a schematic just with data, so it's easy to read. Here's the actual chart. And I'm showing the second pattern. And watch the first two videos. I'm not going to go over that again. It goes up, and the Dow priced in gold periodically returns to what I've always heard is it returns to one. Well, actually, there's a slope to that line, and it returns to something close to one. And actually, here I calculated 0.62 below one, and both of these are slightly above one, so that's not important. What we're going to focus in on is this right here. I'm going to zoom in on the live chart. So right where it turned, then we're going to project out and say, what date does that project to? Basically is the problem. So I'll just go to real quick, I'll just go to that, and I've got it over here on this other page, other screen, and I'll just show you that real briefly. There's what the chart looks like, and as you move your cursor, you get data points. And here is where we're interested in, if I can hit it right there. And one of the things I didn't realize until, gosh, I've been using this thing for many, many months. If you can zoom these handles in right here, and you can zoom in on that period right there. It looks a little more slanted when you do that, but and that makes it easier to go grab a data point that you're interested in. So I thought I'd point that out. That's really all I need from there because I got the data points. I got a screenshot of what I need. And so let's just go on to the next screen if I can. What do I have to do? Hit escape. Let's see, I have to go click on this maybe. There we go. Okay. So those, that's that screen I was looking at. This is a screenshot of the zoomed in area. And so I've got all these data points that I got off that chart, and they're listed right here. And what this problem amounts to find the date, you need to do a little bit of math, a little bit of algebra 1. You take this point, which is a date and a number, and then what I did was I said, well, B and C, the midpoint, and I projected out to a date. And I'll show you the calculations in a second. It's just a spreadsheet slope type calculation. And then I also did the midpoint between D and E here in blue. And so I got a third date also by just taking an average of those two dates. Because if you project through point C, you get a point that seems too far in the future. And if I just projected through point B, I get a point that seems too soon to me. So what I've actually picked, you can pick whatever you want. I mean, there's this date, and then there's the more recent one. That's the one I'm using. I'm using the blue line. Or I'm thinking, I say I'm using it, I'm not using it at all. The whole purpose of this is just to get comfortable with a date because, if I think it's going to be somewhere and I've said this before, 3 to 5 years out, this kind of falls into that category. And I know I have to have patience because that's 4.2 years in the future. So I could be doing this, investing in mining stocks for another 4 years if I wanted to theoretically, go all the way until the Dow Gold equals 1. Well, I may bail out sooner, um, if I'm happy with what I've made, but that's another story. So this is just a matter of getting comfortable with the date. And of course, way back here, where do I have it? That's one number and that's a date. And I'm just going to keep calculating those dates and the numbers until I get comfortable with it. And I'm pretty comfortable with it now. I'm not bailing out of mining stocks. I'm staying in them. And if you're watching, you may want to. You need to know where it's going in order to make a decision. Uh, I say I need to know where it's going before I make a decision to bail in or bail out. And this is just a short term trading idea I noticed when I was doing this. It's the same little section of the chart that I have here. Um, you would buy, these are 3 month to 4 month segments, buy and then sell when it's down here. That could be the subject of another video because I'm not doing that right now personally, but I mean other people could come up with a shorter. I'm long term. I'm looking to get the long term capital gains tax rather than pay short term capital gains. So here's my conclusions. Yeah, I'll just read it real quick. The majority is probably correct in that the exact high price and the exact date that high will occur is impossible to predict. And I say, why not take a stab at it? The only purpose for me is to get comfortable with it. If I don't take a stab at it, I'm not going to know anything more than I do if I do take a stab at it. And in here, I'm going to, as I do these videos, and this is video 3, I'm going to try. When I first typed this in, I said, if your goal is to buy low and sell high, well, it's my goal. I don't know what your goals are. And I left this in just to underscore the fact that I'm not offering any advice here. I'm telling you what I'm doing. And if you can pull out of that something that's useful, then great. I hope that something I'm doing here helps other people as well. But the main thing, my main goal is to get comfortable. Uh, as I make these videos, I find that I think through it one more time and I get more comfortable with what I'm doing. And you don't want to panic in this stuff because it's very volatile. Um, this could be a subject for a future video. Uh, there are those that use 100% fundamentals and never look at a chart. And I just drew this out. And there are those who look at 4-hour charts and trade only based on chart trends, lines on chart, patterns, chart indicators. My contention is, in drawing this, is just hey, I want to find something that's optimum. And I think this is my best stab at it, is to look at a big chart, a big time frame from 1915 2019 is a good balance, and it's a stab at trying to find the optimum. Between looking at noisy 4-hour charts, you keep wanting to look at larger time frame charts. And of course, if you're 100% fundamentals, you don't. It seems like some of the people that are 100% fundamentals don't look at any charts. Well, I think they're somewhere in there. It's impossible to say what that is. It's just a visual. But I'd like to be up there a little higher. And I think this Dow Gold theory helps with that. Um, just some ideas for future videos. This is going to be the next one right here, future video, and some improvements. Yeah, I've already done that, so I did figure that out. So this will be in this video, um, and that's it. Thanks for watching. If you have any questions, just type them in below, and have a good day.